Go ahead, Ben. You can do that whenever you want.
All
So
right,
are you guys
going live?
So while we let that work through what it works through real quickly, are you guys lifted and available? Scott, Lyle, are you guys in a position now to travel or not? You still restricted?
We have permission to travel. Well, I should say it this way. We have a very limited budget and we have a lot of governance. So while we do have permission to travel, we aren't going to be traveling very much.
Okay. All right.
Yeah, pre-COVID, we were under some pretty tight scrutiny and discipline around expenses, to Lyle's point, and then we got shut down for COVID, which was understandable. But yeah, now it be submitted and reviewed and approved, and then if you get approved, then it needs to fit in a sort of an expense box.
So does that mean we're going to see you at some upcoming conferences, or we're not, or still up in the air about that?
Fingers crossed. Lyle and I've been invited to some of the same fall conferences, so I'm hopeful.
Good.
We're looking at possibly 2 or 3 fall conferences.
Very cool. All right, guys. Well, it's time to go. It's 10 o'clock. Good morning, appraisers. Welcome. I'm Bryan Reynolds, your host. You're watching the Appraisal Report webinar, brought to you by the fine folks of Appraiser eLearning. These webinars are typically the 4th Thursday of every month at 10 o'clock Central Standard Time for an hour. But occasionally we have what's called a special edition webinar, and that's what you're watching today. So we're very excited to be here. These sessions are all recorded. And so if you can't stay for the entirety, you can watch the recorded version of this webinar via YouTube. You're watching us through YouTube right now, and we would encourage you to go ahead and hit the subscribe button. That will keep you in the know. For instance, when we have a special edition webinar, you'll get an alert of that. So go ahead and take a moment and hit subscribe, and then you'll continue to be notified when we have these special edition webinars. I'm very excited. We have a great panel today. We have a very great topic today, and I'm looking forward to the conversation. You, as the viewer, get to participate. You can ask questions. So Benjamin will probably show you how to do that right now. You just type in a question. I can't see them, but Ben will filter those over and send those to us. We do ask that you remain professional, be civil, but a hard question's allowed. We're okay with a hard question, right? If you're just complaining, you can do that somewhere else. But if you have a question that you would like to ask, we would certainly entertain those questions. I do want to make this announcement as well. I just got an email this morning, right before we went on air, and there is a USPAP discussion draft webinar today. And the Appraisal Foundation sent that out. I will send the link to that to Ben. And Ben, if you want to put that in the chat, some folks might be interested to attend that as well. The foundation is letting that be public so that you can kind of see what's going on with the consideration of the changes for the next edition of USPAP. So get involved. You have an opportunity to get involved. So we encourage you to do that. So I have a big list of folks. I'll run through them real quickly, and then I will actually let them introduce themselves. Mr. Joe Eibach, Lyle Radke, Scott Reuter, John Ryan, and Mark Schiffman have all joined me today, and I'm super excited about that. And we'll just start back up at the top of the list. Joe, please tell everybody who you are, who you're here today representing.
Okay, again, my name is Joe Eibach. I live in Bismarck, North Dakota, and you're probably all thinking, why is there a North Dakota person on this panel? I'm also the current president of AARO, the Association of Regulatory Officials. President this year because the current president, or the president that was there, had to resign for personal reasons. So I get to be president for 2 years. So they doubled my salary. Here I am. I'm a real estate appraiser. Been doing this for 46 years. And I have an appraisal firm of about 7 appraisers. mostly commercial, I have 2 residential. So with that, oh, one other thing, I was on the North Dakota Appraiser Board for 23 years and also chairman for 21 years, got off in about 5 years ago. Now I'm also an investigator for the board. So we'll see what happens. I'm glad to be here. Thanks, Brian.
Very good. Very good. Joe, one last thing. I mean, most of our viewers have heard of Fannie Mae. They've heard of Freddie Mac. They know what the Appraisal Foundation is, okay? But AARO, some of the viewers may not know what AARO is. So can you just take a moment to explain what is AARO?
Most states have an appraiser board. Some do not. Some have just a 1-person administrator. But back in 1991, these boards and administrators got together and decided that'd be nice to have an association of regulators that meet once or twice a year and talk about regulatory issues. So it started back, well, this is our 30th anniversary this coming fall. And it has now evolved to, I don't know our exact membership right now, but we typically have around 40 members, jurisdictions, and states, all consisting of appraiser boards. So we meet and talk predominantly about appraisal regulatory or appraiser regulatory issues, be it the legal counsel that work on boards, the board members, administrators, and investigators. So all 4 of those arms within the regulatory field are typically represented at our conferences. And basically it's to talk about how different states handle different regulatory issues. A lot of it falls back to the ASC. ASC is also a strong sponsor of AARO because of the fact that they oversee the appraisers. So
Right.
we are basically a group of regulators that get together and talk about anything that comes to mind. And like Lyle Ratke, he's been on our conferences before, and I think Scott has. So we get some great speakers there.
Sure. So simply put, AARO is an association of really not all necessarily, but the majority, I think, of state regulatory boards, appraisal commissions, appraisal panels, whatever you want to call them. And they meet with regularity and talk about, hey, what's going on in your state? This is the challenges we're having in our state, that type of thing. So it's an association of the regulatory folks, if you will. Thank you, Joe. John Ryan, thank you for being here. Please introduce yourself. Tell everybody who you're here representing.
Hi, folks. Good morning, everyone. It's a pleasure to be here representing the Appraisal Qualification Board. I'm the vice chair, taking in the place of Mark Lewis this morning, who sends his regret for not being able to join us today. I've been involved with the foundation in several capacities. The last 5 years, I've served on the Appraisal Qualifications Board, and currently I'm a vice chair. I'm from Newbury, Massachusetts, which is about 30 miles north of Boston. If you can't tell from my accent, we're right on the ocean up here, where it finally cooled off yesterday, I guess. I was in Washington, which I'll mention during my remarks for the last 2 days. We're working on some AQB items that will be of interest to the group. And it was actually hotter here in Boston than it was in Washington, D.C., if you can believe it. But I'm happy to be here. I've been in the business, well, almost as long as Joe, and do a variety of things with a small firm here based out of, again, Newbury, Massachusetts. So again, happy to be here and look forward to our discussion this morning.
Thank you, John. Thank you very much. And thank you for being here. And boy, folks, John sprung into action last minute, and we are very grateful for that. We're very happy that the AQB is on the broadcast today. Mr. Mark Schiffman, please introduce yourself and let everyone know who you're here today representing.
Well, good morning and greetings from 100-degree Minnesota. Doesn't usually go like that, but we're the hot point of the country today. So greetings. My name is Mark Schiffman. I represent the Real Estate Valuation Advocacy Association, and it's a trade group of appraisal management companies and valuation providers. So we have the distinction of working closely with Joe and his groups and all of the other folks represented on the call today as part of industry-wide efforts.
Very good. Thank you, Mark. Mr. Scott Reuter, people know who Freddie Mac is, but tell them what your role over there is.
Hi, good morning, Brian. Happy to. I'm Scott Reuter. I'm the single family chief appraiser and director of valuation at Freddie Mac. Like a lot of my colleagues here, I've got a number of years of experience in the business. I'd say roughly the first half of my career as a fee appraiser, and then roughly the last 15, 17, 18 years on the bank side prior to coming to Freddie Mac. So real excited to be on the panel today. Appreciate the invitation and the outreach, Bryan, from you and Ben, and look forward to it.
Thank you, Scott. Last but not least, by any measure, Lyle Radke. Lyle, everybody's heard of Fannie Mae, but let everyone know what your position over there at Fannie Mae is, please.
Thanks, Bryan. I'm Director of Collateral Policy at Fannie Mae. So our team manages the aspects of the selling guide, which is our policy manual that relate to property eligibility and appraisals, collateral. I'm a residential certified appraiser in the state of New Mexico, and I've been at Fannie Mae about 8 years.
Great, great. Thank you, Lyle. And I just want to, again, thank you all for taking time out of your very busy schedule to be here. This is an important topic, I think, and we've actually allocated additional time for today's broadcast. I know John's going to have to hop off, right at the 1 hour part, but we certainly are appreciative that the AQB is here. So we're going to get to him pretty quickly. I know Lyle has a little presentation. We're going to put that up in just a second. But our conversation today is about trainees. So we're going to talk a lot about trainees. We're going to talk about how someone becomes an appraiser, not in great detail, but maybe the challenges they have with getting on that journey, because it is a big challenge. There's been a lot of roadblocks historically. I know John's going to talk about maybe an alternative path here in just a moment. That maybe you can take to become a certified appraiser. We're going to talk about the problem we're having with trainees from the lender letting us utilize those trainees and the frustration with that, and can something be done? So we've got a lot to talk about. We encourage you to submit your questions, and I just want you to think for a moment. When is the last time you, as a practicing appraiser, and I know we have a big audience, so guys on the stage here, just to let you know, we'll have lenders and underwriters, real estate agents, appraisers, investigators, regulators. We've got a very diverse audience here, and it's worldwide. We have folks from all over the world watch these broadcasts, so we're excited about that and continuing to grow, by the way. But when's the last time one of my viewers, had an opportunity to ask Fannie Mae a question, or Freddie Mac, or the Appraisal Foundation? That opportunity rarely, if ever, occurs. Now, thankfully, we have conferences, and all these guys come to the conferences, and they are very approachable, and I thank all of you for that. But now with this media, we have the opportunity to allow you to ask these questions. And it's a wonderful thing, that we have this opportunity where we can bring these folks together and let them educate us, as well as field some of our questions. So thank you very much once again for being here. Lyle, I'm going to turn over to you. And if you want to go ahead and give your little slide deck, that'd be great. And I'll just let our viewers know, I haven't seen this. All of these are unrehearsed. I know that's very uncommon, but these are unrehearsed. And so I'm putting my eyes on this for the very first time, just like my viewers are. Lyle?
Thank you, Bryan. So I think some of the things that I'm going to share, we've borrowed from the Appraisal Foundation's information, and some of it, I think others, Scott will certainly want to talk about similar themes. So I'm not going to spend a huge amount of time on this, but I just wanted to kind of level set a little bit about what Fannie Mae has done and what we're thinking about the question of appraiser trainees. This disclaimer just says, if I say anything inconsistent with the selling guide, you have to rely on the selling guide. Okay, so this is a chart that shows Uniform Collateral Data Portal submissions, or data from the Uniform Collateral Data Portal going back through 2013. And the blue shaded area is the volume of appraisals received. And that black dotted line is the best fit line to that volume of appraisals. And what you can see is there's a lot of dips and peaks. Those are seasonal. It very typically dips in January and February, and it peaks in early summer. And so you do see this seasonal up and down, and that's why we use the best fit line to make sure we emphasize the trend. What you can see is total appraisal volume received through the GSE portal has been steadily increasing over the last 8 years. Part of that's just a factor of the economics, interest rates, refinance boom that we're occurring right now. We had our biggest month ever in terms of appraisals received in April of this year. I haven't seen May data yet, so I don't know if May eclipsed that or not. But I think the news for appraisers, and you know this better than I do because you're out there in the field doing the work, is it's been very busy. We expect with the growth in demographics, population growth, and demand for housing, that this demand for appraisals is not going to go away. I think this is here to stay. The red line at the top there, that's the number of appraisers, individual appraisers that we see in this same UCDP data set. And you can see that it peaked back in 2013 at about 43,000 appraisers, and it has declined a little bit. We're now at about 40,000. So the interesting thing here for us who, our role as appraisers is to understand markets and interpret markets. Think about your basic economics of supply and demand. The demand is steadily increasing. In fact, it's about double now what it was 4 or 5 years ago, but the supply is flat, it's static. So we're experiencing a supply crunch, right? And that should lead to what? Your supply curves would tell you it should lead to increased price. In other words, increased fees. But it also is leading to some pressure on availability. And if you think about some of the things you might have experienced in the grocery store in the last year, you can understand what, how that dynamic works as well. So that's sort of the backdrop for this question of appraiser trainees. How do we get more supply or more flexible, elastic supply to meet an increasing demand? So this slide came from data from the Appraisal Foundation. They recently conducted a survey of appraisers, and what they found, one of the things that they asked about was age. And so what you can see here is that about 1/3 of appraisers, at least of those who replied to their survey, are over retirement age, over age 65. And another 1/3 are between 55 and 65 or nearing retirement age. So we've got about 2/3 of our appraisers are at or above what would be considered sort of a traditional retirement age.
Hey, Lyle,
so we put these two.
Lyle, if I could jump in real quick, and most of these questions we're going to hold till the end, but go back to that slide before the one you have on right now, because we have a question relative to the number of appraisers. So I wanted to go ahead and ask this question of you. Michael,
Sure.
One of our viewers, Michael, who is viewing the broadcast, his question is, are the active appraisers indicated only those that are submitting to Fannie Mae as opposed to the total number of active residential appraisers?
Yes, that's correct. That's correct. So there are certainly more residential appraisers who don't submit to our portal. This is only counting the ones who do submit to the portal. I think on a relative basis, it is meaningful, though. It tells you the trend, right? We would expect more appraisers submitting to our portal if there were more appraisers, if the number of appraisers was growing.
Right. Thank you for going back on that. And just so the viewers know, keep the questions coming. We're not gonna ask every question as they come in like that. We're gonna let some of those build up and get to as many as we can throughout the broadcast. But I did want to go ahead and just stop you real quick and ask that. So thank you, Lyle. Go right ahead.
Sure. All right, so this next graph on the left here shows the number of trainees in our same data set. The way we establish the trainee count is by people who signed the left side of the report. So this is not something we dredged out of the comment addendum, but it's actual signatures. and their signatures that are indicated in the UCP data as being some form of a trainee or an unlicensed appraiser. So the growth has been steady, right? We started back in 2011 at less than 50. That was before UCDP was mandatory. About the middle of 2012, that's where it became mandatory, and we see about 80. And since then, it's grown to over 450. The biggest growth has been in the last 2 years, so it coincides with that growth in demand that we saw on the earlier slide. So we are seeing some increase in the number of trainees actively signing appraisal reports in the conforming or the GSE space. So let's ask ourselves how, the calculations on the right are intended to sort of represent whether or not this is a meaningful change and how meaningful it is. So we looked at these 40,000 appraisers, and we took the numbers from the Appraisal Foundation survey and said, okay, about a third of them are over retirement age already. And let's just sort of assume that they're going to retire over the next 10 years, and maybe 1/10 per year, right? So 1/3 of 40,000 times 1/10, we're projecting somewhere around 1,200 or 1,300 retirements annually. Now, I know that's really loose math, right? So maybe it's more, maybe it's less, but I think it gets you in the ballpark. Now you look at the 450 trainees, let's assume that they all make the conversion to licensed or certified status in the next year, and that they're then backfilled with a new 450 after that. I'm not sure that that's really the case. Sometimes it took me longer than a year to move from registered to certified. So, but let's make that optimistic assumption. Then it still looks like we've got about an 800 decline annually over the next 10 years. So I don't think that with the current trends, we are at replacement rate yet. In fact, we're maybe half or 1/3 of replacement rate. I'm sure others will talk more about this. I'm not going to dwell on it, but I'm just going to say this is a little mock-up we did of the steps from starting to finish to becoming a licensed or certified appraiser. It's pretty onerous. I know others can talk in more detail about this, but it's not an easy path. So one of the concerns we have is where are the supervisory appraisers? And we have a little program which I could talk more about later called the Appraiser Diversity Initiative. It's a partnership with the Appraisal Institute and the Urban League and others. And tip of the hat to Freddie, to Scott. I think Freddie is joining that collaboration also, where we offer scholarships to potential trainees to take their qualifying education. And one of the challenges we've run into with this is they get their education done, and then we have a hard time finding someone who will supervise them and help them get their experience log. So when we talk to appraisers about this, here's some of the responses we get, and maybe you've thought similar thoughts or heard others say similar things. But Fannie Mae doesn't let me use trainees. Well, I'm going to bust that myth here in a minute. Lenders don't allow me to sign or don't allow them to sign. That's also a questionable assertion. I don't have time to mentor anyone. Is there an additional liability or errors and omissions insurance exposure? I make less money, right? Or it's just future competition. So these are some of the hurdles or headstreams. Let's tackle Fannie Mae policy first. The highlights here are to help you focus on the essence of the policy. This is straight from our selling guide. Fannie Mae allows a trainee to perform the entire appraisal. That's assuming that it's acceptable under state law, right? Black and white, we allow it. There's no caveats, there's no exceptions.
Hey, Lyle, on that page, and I've been trying to hold my tongue, but on that page, I would want everyone watching to look at something else. It says Fannie Mae allows an unlicensed or uncertified appraiser or trainee. That means if it's applicable under state law, you don't have to have someone that has a trainee license. Now, they need to be competent. They need to, right? But what that means is you could have an individual that doesn't even have a trainee license do a significant amount or the entire appraisal if he or she is qualified to do so. And that's a huge opportunity. So I applaud Fannie Mae and Freddie Mac for that. The problem is, again, the lenders, and we'll get into some of that in a minute, but that's significant right there. For instance, Colorado, I'm told, does not have a trainee license. They don't have trainees. But if it was allowable under state law for an unlicensed person, then that would allow them to still sign the report.
Yeah, that's a great point, Brian, and that's the essence of what we're trying to establish with this policy. First of all, we're deferential to state law. You need to know your state law. You need to know what's permissible. But if it's permissible under state law, we want to encourage it, right? We want to encourage new people to come into the profession.
Right.
Well, one of the questions is there a liability? You know, by taking on a trainee, am I putting myself in a position where if they do subpar work that I'm going to have a liability? So we decided to look at the quality of the appraisals that had been signed by the trainee group. The blue is all appraisers and the orange is the trainees. The upper right graph is the CU risk score. You may or may not subscribe to the CU risk score. It's really intended more for lenders, and it's a measure of risk, not quality. But what you can see is that the scores are virtually indistinguishable between trainees and non-trainees. There's really no incremental risk. The lower right is the CU flags. There's 3 different kinds of flags, an ECF, an OVF, and an AQF. And what you see across the board is that the performance of the trainees is very similar to the control group, to the overall population. Now, you do see, in terms of some slight differences, trainees have fewer AQF, that's quality flags, but they have a little bit more OVF, that's overvaluation flags. I don't know what's driving that. The differences are not very big, but it's interesting. It's kind of offsetting, right? Then a third measure that we looked at is our quality control. So that's the lower left here. We have a team that does a quality control review, a sample of all the loans we received, and they look at the appraisals, among other things. They, from among that sample, they cite findings on about 15% of all appraisals. Now, I will say some of the appraisals are a targeted sample, so that's not to say 15% of all appraisals have problems. It's to say that within our target. And we are targeting loans that we think might have problems. And so that's not a measure, a neutral measure of quality. But for that same sample, the trainees' findings rate is only 12%. So the trainees actually are performing a little bit better in our QC process than all appraisers. So I think, to me, this gives me a lot of reassurance that the trainee is certainly capable of and consistently does perform consistent with the overall population of appraisers. And that should reduce any concerns about additional liability or that kind of thing. So here's some quotes from lenders. Of course, we engage with lenders regularly, and we've put this question to them: is why don't you use trainees more often? And most of them, I think, well, that we engage with, see, in my role, I'm engaging mainly with lenders who have robust or sophisticated collateral management programs, meaning they probably have a chief appraiser, right? They have someone who's sort of an expert. And when you talk to those folks, I think they're very much aligned with our view on this, that we want to encourage new people in the profession. And so you see these quotes are all pretty encouraging. None of them say they don't allow it. They all say we do allow it. We may put some constraints on quality, or we're going to look at the supervisor and make sure they're competent in their role. But they all across the board said, yeah, we allow this. Now, that may not be representative of all the lenders in the world, because again, this is probably a more sophisticated crowd, but I thought that was encouraging. Okay, so kind of a summary here. Mortgage lending industry faces a shortfall of in the future of appraisers, given the current trends. We need more supervisory appraisers. We know there's lots of barriers. We're trying to do what we can in terms of policy and encouraging, allowing it. And the important thing is the trainees do very well. Their quality compares favorably with the overall population. Thanks, Brian, for letting me say that, and I'll turn it back to you.
Thank you very much for that. A lot of great information there. There's a couple of things that I would, and we've got questions coming in, but I want to get to John because I know his time's limited. But there's a couple of things there on the 800 decline, you know, the shortfall based on your projections. And I love that you guys have done that. I would challenge that slightly. And I know there's not a good way to measure unless you do it manually, but there is a high percentage of lenders that will not let the trainee sign, for whatever reason. And so your statistics were drawn from those reports where there was a trainee signing, right? Now I know because I'm a practicing appraiser and I have a trainee that's normally sitting in the other room. She's on vacation for 11 days, killing me. But nonetheless, some let her sign the report. I sign on the right, and some absolutely do not. So there is a high volume of reports that come out of my office that does not have that trainee signature, you know, that's not being counted in that 450 number you had up there. I know there's probably no way to extract that. We mentioned her in the certification. We put a description of what she did as we're required to under USPAP. But those numbers you had are just when she signs the report, right? So the numbers are going to be, you know, skewed a little bit there. But great presentation.
I have kind of a response to that.
Okay.
And if you listen to Jim Parks at the ASC, what he says is over the last 10 years or so, they've seen a decline of about 1% per year in their total number of on the ASC registry. And the registry, I think, has 80 to 90,000 appraisers. So 1% would be about 800. So his annual decline matches our rough the back of the napkin math on the shortfall. So I'm not saying it is 800 exactly, but I do think both of these approaches, which are very independent of each other, are arriving at the similar conclusion that we've got a shortfall.
Yeah. And let me throw this out there, and you guys can all think about this because I want to go ahead and grab another guest up real quickly. But this is going to be part of our conversation today. So you can, I'll go ahead and throw this question out there, but just you can think on it. How's that? The last slide you had talked about the lender's willingness to say, hey, the appraiser can bring someone along to assist. While that may be true, I'm just telling you again, as a practicing appraiser, as someone in the field doing this every day, I have a much higher percent of clients that will not let the trainee go out without me than I do of clients that will allow her to go out without me. Okay. So while they're okay with her participating, I still have to go, which is the biggest problem, because if I have to go out, and I know the majority of the appraisers that I talk to, that's their number one issue. If I have to go out on the property anyway, why don't I just do the flipping work? What's the benefit of me bringing someone along? Okay. So if we want to increase the number of appraisers coming into this business, encourage supervisory appraisers to take on more trainees, they have to provide value to the business owner. And I give charity, but for me to just bring someone and train them and go along and help them get certified, that's called charity. Okay. So think on that, and let's I would love for the great minds that are here today to formulate or put a plan of action together to help resolve that issue, because it is the biggest issue, I think. As far as entry to, I kind of want to go to Scott, but Scott, forgive me. I know John's on a limited schedule, so I want to rope him in real quick. John, we hear a lot of what Lyle said, is that, we've got a lot of folks exiting the profession, whether they're retiring, as he's suggesting, maybe they're just getting sick and tired and just quit. I've had those days, to be honest with you. I've had those days. You're very unappreciative with what you do. Everybody yells at you, especially if they don't like your number. I got a complaint against me. Now I got this against. Forget this. I'll go do something else, right? So we have a certain number exiting the profession because of their distaste. We have a certain number exiting the profession because they're retiring. And let's just face it, we have a high percentage exiting the profession because they're dying. Okay. So we do need a steady flow of new folks coming into the profession. One of the biggest obstacles there is trying to find a supervisor or mentor. I had a gentleman in my class who said he called 83 people before he found one willing to even talk to him. We're on Clubhouse now. We got a little club, Real Estate Appraisal Talk, right? We have tons of trainees coming into those Clubhouse rooms saying, hey, I've already got all my education out of the way. I can't find a supervisor, So, John, what has the AQB done? I know they've passed something recently. Let our viewers know what we're talking about as far as an alternative path to the traditional method of becoming an appraiser.
Thank you, Brian. Yeah, those are all salient comments. And just by way of background, the foundation in general, and the AQB in particular, has been well aware for many, many years now of some of the barriers to the profession, entering at the profession, specifically with respect to experience. So you can go back, 10 years or so, when the criteria was modified to allow for practicums, and that was something that the AQB was very excited about, to give folks hopefully an opportunity to provide some non-traditional ways of demonstrating their experience. But for a multitude of reasons, that never really got off the ground. There were no practicum programs that ever came out. So in 2015, recognizing that option was not materializing, the AQB issued a white paper on this notion of a practicum. And without going through all the history, today we're at a position now, as of January 1st, 2021, we have what's known as PEREA, which is going to be a program, or it is a program that will allow for entities to develop not education, but training in a controlled environment that will allow trainees to capture up to 100% of their experience requirements, so that they can proceed to the final step, and that is to take their license exam. I'm happy to report that the program is receiving not only a lot of interest from providers who are interested in putting together a PEREA program, but many states already have adopted PEREA, either explicitly or implicitly, as something they will adopt when it comes into being. And other states are sitting back waiting to see the actual program itself. But we're after a long gestation period, I think we're almost there, and the AQB and the foundation in general are very excited about it. So excited about it that the foundation has actually committed a significant amount of resources at their last Board of Trustees meeting, voted to appropriate a significant amount of money to help get this practicum, to help get PEREA off the ground. In other words, provide financial incentives and assistance to both providers and possibly trainees as well. So
Wow.
we're really excited about it. We're on the precipice, I would say, of this thing happening. We have a database of several hundred trainees that have expressed interest to the foundation to be possibly considered for participation in this program. So anybody in your audience today that is a trainee that's struggling with getting experience, the foundation encourages you to contact them via the website. There's a link on the webpage, and get your name in there as someone who might be interested in participating in this program. Real quickly, just touching on what I mentioned earlier, not specifically dealing with trainees, but you trainees will be interested in this, and that is in 2019, we conducted what we call occupational survey. And what that occupational survey does is every 7 to 8 years, the AQB surveys the state of the industry and basically does an in-depth research as to what needs to be on the qualifying exams for the 3 license levels. Unfortunately, the pandemic put us behind the 8 ball time-wise, where we could not meet last June as we were scheduled. So we literally just the last 2 days completed our occupation analysis meetings, which will provide the basis for the content outlines, updated content outlines for each of the appraisal exams, including the licensed residential and the certified residential exams. So those exams as of January 1st, 2022 will be tweaked and modified to recognize what is the current state of the practice and current needs in the marketplace today. So we're real excited. Having participated myself in these meetings the last 2 days, I can assure you that the exams are going to be better than ever in terms of testing items and testing areas, topical areas that are relevant to the practicing appraisers, as opposed to maybe some things that are more theoretical and more, book oriented as opposed to practice oriented. So that's kind of where the AQB is today. As you know, we've been really busy with all the pandemic related stuff, but we're real happy and excited to report that hopefully, in the next few months, we're going to have some real substantive progress and options to deal with this. What Lyle pointed out in step 6 in his little flow chart was one of the continuing huge hurdles for folks getting into the industry, and hopefully this PEREA program is going to be a good opportunity for folks who have a difficult time. And we're not shutting the door on the traditional method. Don't get me wrong. We're not saying it's either or. We're trying to come up with another viable alternative for the folks that are having challenges.
Sure, an alternative path. So a couple of things, John, but just again, because I know you're pressed for time. We've got some questions coming in that I want to ask you for our viewers before you escape us. But again, for the viewers, just as a summary or quick summary, PEREA, Practical Applications of Real Estate Appraisal, is a non-traditional path to becoming a certified appraiser. Now, it's not for certified general, it's certified residential license level. And what it is, you still have to take all your qualifying education, right? There's no bypass for that. You have to meet the collegiate requirement for certified residential. And there's 6 options for that, by the way. So you don't have to have a bachelor's degree, but you certainly can, right? That's option 1 of 6. But then in addition to that, you would have to go through this PEREA program. And we're not 100% sure what that's going to look like yet, but there's modules that you have to go through, right? And however long that takes, you have to successfully navigate those. You'll have a mentor that you have to check in with periodically. But the point is, once you navigate that model, right, those models, you can be qualified to set for the national exam without ever having had a supervisor. So that obstacle, that constantly closed door that you get trying to find a supervisor to enter the profession is taken away through this traditional approach. And guys, this is the law of the land now. It's not an idea. The foundation, the AQB passed that, and that is an option. Do you have an ETA on when any educational provider, by the way, Ben, he said he's giving away money, so make a note of that. Do you have any ETA on when we can see some of these first models or when they might be available?
Yeah, unfortunately, I don't. All I can report to you at this time is that we do have active participation. We reviewed some preliminary plans, but I'd be remiss if I put out any date specific.
Sure,
But
sure.
I will say we're hoping from the AQB's point of view that it's sooner than later. Let's put it that way.
Sure. All right, John, let me ask you specifically a few questions because they're rolling in hot and heavy. Glenn is asking a question. He says, I have a question for John. Why does a certified residential appraiser need 3 years of experience to take on a trainee? You can make it either 300 plus appraisals or 3 years for an active cert to encourage new active who wants trainees. And I think that's a great question. So I have a certified residential appraiser that works for me in the Nashville market. He's been certified for 2 years. We would, we'd love to bring him a trainee, but we can't. He's got to be 3 years. Do you have any insight in that, John?
Yeah, that was the justification for that was done back when they developed the supervisory appraisal model in the previous criteria. I think it was back in 2012, 2013. I don't have a magic answer as to why it was 3 years. It's certainly something that I'm happy to make note of and bring to the board's attention. But it seems among the stakeholders that 3 years was a happy medium. Now, again, I can't point to any empirical evidence to say that that's the number that it should be, but point well taken.
And this is, Glenn, your excellent question. And this is where I encourage appraisers to get involved. The Appraisal Foundation welcomes your thoughts and opinions and ideas. So give them to them, right? You might just impact change. Bryan asked a question, why can't some colleges make an appraiser degree? John?
Well, that was one thing, again, given a limited time, I don't want to go into too much, but we have, the AQB has had for well over a decade now, a college and university program whereby the AQB works closely with universities around the country to get them to a point where if you get a real estate degree, say, for example, from the University of Central Florida, all of your qualifying education is covered as part of that 4-year bachelor's degree in real estate, with the exception of the 15-hour USPAP course. I don't know the number off the top of my head, but there's at least, I'm going to say at least 20 or 25 programs, even more, and they're all listed on the foundation's website that have programs both at the bachelor's and the graduate school level. I know my alma mater, Penn State, we just approved in the past 2 weeks for their real estate program. So yeah, we do have a number of programs. We'd like to have even more programs, and we encourage you to, if you know either your alma mater or your local university has some real estate programs or courses in their business finance department that might qualify. We work closely with the university. We try to make it as easy as possible. The AQB does all the work from the standpoint of, we go out, we look at the curriculum. The universities just have to provide it to us. We typically go out on site at the university, meet with the program director, the university professors themselves, and all the board members have been participating in that over the years. So it's a program that has gotten more attention recently, particularly with the historically Black and Latino universities, when we're working closely with several of them right now. Also, even at the community college level, we're working with, I have worked in the past with some of those JUCOs or community colleges, if you will, to help identify areas where, if you've taken college level courses, for example, in statistics or economics, that even partially, if you've already taken these courses and we can match them up with some of the QE, why take those courses again? So that's a great question. It's something that we continue to expand that program. And again, I would encourage the audience, if you know of any program out there that might be qualify for this, let the AQB know. And we proactively go out and seek out these programs once we get these kind of leads. So thank you.
Thank you, John. Thank you, John. And hang out with us as long as you can. I know you got to exit shortly, and
Yep.
people, you may see them disappear, but that's okay. Joe, let me jump over to you for a minute. You're here on behalf of AARO, and so you kind of have an idea of the pulse of a lot of these states and what they're doing. What, John said some of the states have accepted PEREA, some are, going to kind of wait and see, kind of a wait and see approach. Are there any states that you're aware of, and maybe John can help too if need be, that have said we're absolutely not going to take PEREA, or maybe we'll take 50%? We feel that it's important that a new person entering the profession goes hand in hand. We'll call it a ride along, if you will. Are you aware of any states that's taken that position as of yet?
I don't have any specific numbers at all because of, again, COVID. We had a limited seminars or conferences this past year, so we did not specifically address that. That is on the agenda for the fall conference. But I can tell you just empirically that there are some states, North Dakota for one, accepted it carte blanche. If you take PEREA, it's going to be accepted in the state. And I know most of the states around here have done that. So I can't give you a specific number, but I do want to just piggyback on what something John said about the trainee, or maybe it was Lyle, relative to the states allowing trainees to, if you want to call it that, my question would be, why could not the states consider that if the trainee meets the state requirements relative to inspections, why couldn't a lender accept that? Because in the state of North Dakota, you, as a trainee, the statute says that once the supervisor has determined that the trainee is competent, the supervisor no longer has to go along. Unfortunately, that doesn't work in the lender world. My question then is, why can't that work in the lender world? But again, we can't control what the lenders want, but the thought process that was there to me was, if that can work as far as some states, you would think most lenders could accept that. And that's just a question. I thought, why wouldn't that work?
So Joe, let's just shift gears and get right into that, because that's my biggest pet peeve, right? And I'd like all of you to participate in this. And before we try and talk about a solution, let's reiterate what Freddie Mac's position is. Okay. So Scott's here with Freddie Mac. We know Fannie Mae, I'll put it up on the screen, and it said even an unlicensed person could provide a significant amount of assistance or even complete the appraisal in its entirety, as long as a supervising appraiser is certified and signs off on that. So Scott, does Freddie Mac have a different policy, or is it somewhat similar to Fannie Mae's policy with regard to the use of trainees?
No, Lyle did a nice job summing that up. The GSEs have aligned, and both have long accepted and allowed trainees. And I liked Lyle's slides. I thought they were foundational, not only just from, reminding your viewers what the policy states, but also emphasizing the immediate and the likely ongoing capacity concerns that we're going to see. So, we align very closely with that, and that's part of that message. We hats off to the AQB. I know John's got a drop. I think the foundation is taking some big steps, both with PEREA and the college program that he mentioned, the ADI initiative, that appraiser diversity initiative effort that Lyle mentioned is not only aimed at trainees, but also aimed at attracting diverse entrants into the business. Long overdue, much needed, and that is a great effort. We also message to our lender clients to allow trainees. I sat on the bank side for many years, so I understand and appreciate firsthand the lender overlays and how that can frustrate and complicate the process. But I think it's part of the discussion, including all the way down to the individual appraiser, to encourage them to be open to taking on a trainee and supervising a young trainee. I've heard the argument. You mentioned it earlier, Brian. I'm not picking on you. I heard my dad was an appraiser. I heard it out of his mouth. I'm not interested in training my competition. And I think that was, that's kind of a zero-sum view, and I appreciate that view. But I think we need to have a little bit different lens on this, and that, you're not only bringing on a trainee, you might be also training a productive employee. Look at it through that lens. You can possibly bring in some younger talent. A lot of us, including myself, are represented in the right side of those vertical demographic bars that Lyle had up on his earlier slide. So if you're bringing in a younger person, they may be a little more tech savvy. They may bring in a dimension of social media or other things that can actually help grow your business. And lastly, and I'll hand it back, there was an appraiser friend of mine in Pennsylvania who was doing something very clever, about my age. He's got a medium-sized firm. He's going out of his way to be a little strategic, and he's brought on a trainee that's bilingual. He thinks it can give him an avenue into a market share that not only is he bringing on a young appraiser, but it's he's going to differentiate himself from a lot of other firms. So I think there's a lot of different ways you can look at this, and I just encourage broadly across the industry that we all keep our eyes open, the landscape open, and really, appreciate that there's more than just one view on this.
Yeah, absolutely. And, I talk to folks. I believe that we have an obligation to give back. If the profession's been good to you and you're in that demographic that Lyle put up earlier, maybe you're thinking of retiring. And I did a podcast on this. What's your exit strategy? Are you just going to, work, and then just close your business and be done? Well, why, maybe think about giving back, maybe bring in a trainee or two, maybe help them build a book of business and exit the strategy, and you get a little residual into your retirement with that. You've helped them, you've helped yourself, and you've helped the communities in which you serve, right? So there's all types of options available. We see a lot of times appraisers just work and I'm tired, I'm done, I'm retiring, it's over. They turn the lights off and they're done. And there's a better exit strategy than that for both that appraiser and helping someone new get into the profession. So Mark, you've heard a lot about Fannie Mae. Freddie Mac allows it. Most of the regulators, Joe is saying, why can't the trainee go out? The biggest pushback we're finding as practicing appraisers, and I think you would have a whole level of supervisors willing to take on folks if after that threshold, in Tennessee, it's the first 500 hours. In Kentucky, I've got to go with them for the first 50 assignments. And don't get me wrong, if it takes 100 assignments, I have to go with them. I'm going to go with them 100, right? They've got to be competent. I got to be comfortable. I'm signing it. I'm accepting responsibility. But whatever that time frame, when we get them there, why can't I send that trainee out without me going? What is the pushback from the lending community on this?
So let me try to tackle this from a macro perspective. First of all, AMCs are hugely supportive of trainees. We want to bring more people into the industry. As no secret, we work for the lenders and we're locked into client agreements when the lenders say no. But we are working on trying to educate them on a daily basis, just like Fannie and Freddie said that they were doing on that side. Lenders have told us very directly, and I don't speak for the lenders, so please, we have to ask them directly for their own quotes, but
and I will.
Yeah, we've spoken with their associations, we spoke with many lenders, and it comes down to a couple of things. One is there are some lenders that do allow trainees, and we're excited by that. We want to see those numbers grow. There is a good deal of a good number of lenders that don't allow the use of a trainee, and the reason they've cited, for right or wrong, is they believe that there is a risk management issue tied to the interagency guidelines. We've read it and don't believe that that's the case, but that's what they're going to. So it's a legal issue from the lender perspective. And then there's the restrictive policies that you guys have pointed out. Well, they won't allow the lendee to, or the trainee to inspect into That's a problem. We can't monetize the use of a trainee. That's a huge problem. So there's a lot of things happening there on the lender side. We've also been told from the lenders that, hey, we won't allow the use of trainees till they're on the national registry. So what we've done as an organization, working with our partners who are on this call, as well as many that aren't, is let's try to find some solutions. So number one is we have introduced, or we will be introducing, legislation in Congress that's coming any day now, and that will allow trainees to be on the national registry. We did that with the appraisal subcommittee's help, and that bill will be ready to go. Secondly, we've been working on legislation that allows a licensed appraiser to once again do FHA assignments. That's going to be a big deal. When we had talked to lender organizations and they had said, well, look, it's a risk management issue related to the interagency guidelines, we wrote a letter a couple of weeks ago asking the appraisal subcommittee and its board for guidance on whether or not there was anything that would prohibit the use of a trainee, so that we can maybe check that box for those lenders that think that there's a risk there. So we're trying to get at those issues directly. I don't have a magic wand. There isn't one. And there are certainly a lot of things that are happening industry-wide to help overcome those the immediate hurdle. But you got to look at this as a short-term and a long-term proposition. In the short term, there's all these things we can do today. Some of the things that I've mentioned, some of the programs under TAF, the creation of PEREA, AQB qualification changes, all of these different things are important and they're all part of moving forward. But in the short term, that will help. But there's a long-term view. PEREA is not going to be ready for at least a year. Based on its own RFP and when those dollars are coming. You have a number of states that haven't approved it, don't necessarily know what it is, and won't approve it till they can see it, feel it, touch it, smell it. So there's still time on that that needs to, before that becomes really a reality. But it's super exciting and I'm glad it's moving forward, but it's not going to happen tomorrow. And then secondly, is just the overall discussion that I think folks on the call had mentioned about trainees, and that is, do we need to continue to put glue and paper clips and staples onto the current trainee model, or do we start over? Do we do something different? And that's not something that just is going to snap of a finger. That's industry discussion over several years. So that's the longer term does that look differently? So I think there's a lot here in terms of the use of trainees. There's a lot of exciting things that are happening, and I think there's a lot of synergy. But the bottom line is, for the lenders, we've got to, get the trainees on the registry. We need to help make sure that we're addressing those risk management questions. And then, frankly, it's education. It's all of the folks on this call. It's all of the folks in the industry continuing to talk to the lenders as to why it's important. There isn't one reason why they don't use them.
Yeah. Well, I think the biggest thing is them not being on the registry, as you alluded to. There's someone or some entity that has advised them, since they're not on the registry, they can't do it. And my position is, whoever advised them of that, they shouldn't listen to that entity. They're wrong, in my opinion.
But there's another part of this, though, too, Brian, just to touch on Joe's part. In addition to having the lenders, and we need to have those policies and get rid of anything that might be restrictive, the states are all over the place as it relates to the definition of a trainee, what's prohibited, what's not, and whether or not they even recognize the term trainee. So there's a lot of work that's going to need to be done at the state level and helping those state appraisal boards identify where those roadblocks are, and to fix them will take rulemaking or lawmaking, and we're there to help them. But there's a lot to this if we're going to do it. But for years, we've talked about it. We have to go and blow these barriers up. We have to push through.
Okay, so we talked about shortage, right? Lyle presented that very eloquently. That we have more folks exiting the profession than we have entering the profession. So in the very short term, it's going to be a significant problem, right? Maybe PEREA will help, maybe it won't. That's remain to be seen, right? It's a good effort. I think it's a good idea. But I'm just telling you right now, if we could get the lending community to let me train someone and send them out, that's going to solve a lot of the problem. So let me present one other thing. As an appraiser, I believe it's important to employ critical thinking. I think it's important to use good judgment. And I think it's important to invoke a little common sense. Would all of you agree with that? Okay. I think most of you shook your head. There's been a lot of talk of using non-appraisers to go get the data collection. And while I have mixed feelings about that, and I know that's not the nature of this broadcast, it's important for me to bring that up because it seems like the lending community is embracing that. Let's let someone else go out to the property and gather the data collection, send it back. Then the AMC will send that to the appraiser, and the appraiser cannot even leave their desk, do basically a desktop appraisal, rely on that information, and that'll solve some of the time delays and shortage issues. If that sounds like a good program, doesn't it defy common sense for them not to let me send my trainee out? Someone I've trained? If I'm going to be relying on that information, why can't I use the person that I've trained and send them out? Who can answer some of that for me? Because I really struggle. Scott, go ahead.
So since you opened the appraisal modernization door, I'll step in. And you talked about common sense. I think it was Voltaire who famously said common sense is not so common. But I think a lens to put on, and maybe a dimension rather, to put on this discussion is maybe where you're going in a slightly different direction. You know, we've been focused at the GSE level by the direction of our regulator a few years ago to really look at and explore what modernization and innovation might look like. And it didn't say necessarily at the expense of the appraiser. It was to encourage what else could be out there. You've grabbed on the one thing that seemed to bubble to the top of what else might be out there. And I think there were versions of testing that went on. To me, I think another opportunity, maybe a more significant opportunity, actually keeps appraisers in the process, are ways that we can think about other appraisal options on lower risk loans. So, you know, do we need a full 1004, Form 70, full-blown traditional inspection all the way start to finish on every single loan across the country? You know, I've been in conferences and rooms with you, Brian. I asked that question, and even appraisers say, no, you know, you don't need that on every single assignment. So on low risk assignments where you've got a friendly LTV, you even just set aside strong credit and the credit profile, but there are a whole set or subset of loans, which I think there's other options. And I think those options don't necessarily need to be non-appraiser options. So that would be my sort of initial reaction to your statement. And I'd be interested to what my panelists might have to add.
Yeah, I'll would welcome comments from others. And yes, Scott, I agree with you. We bought a condo in Nashville, you know, and we had an option of not getting an appraisal. And as a consumer, it hurts my soul to say this as an appraiser, but as a consumer, I could care less about the appraisal. I was going to buy that condominium regardless of what any third-party appraiser said about it. It was irrelevant to me. So as a consumer, I didn't care. I just bought another house here for cash. We didn't get an appraisal. I could care less, right? So there are times, certainly low risk, that's a lender decision. And I wholeheartedly agree with you. One other little caveat to this PDC I want to bring up, and then I welcome others' comments on this. If the modernization is, hey, let's have a non-appraiser go out and do the inspection, why can't I train them? I would support that wholly if I say, great, I can only have 3 trainees, but I'll bring in 5 people train them how to do the inspection process. Once they're competent, once they know what they're doing, I'll send those 5 out under my direction, under my company. And then I'm going to trust them. I'm willing to take responsibility because I trained them. How about that model working? It seems like there's someone else, some other entity that's going to train these folks and then ask me to rely on it. And I think what the typical practicing appraiser is getting heartburn about is they don't know that person. They don't know if they can rely on that entity. But if it was someone that I trained or that they trained, they probably would feel more comfortable with that. So Mark, Lyle, Joe, any comments on the PDC? And I'm not trying to give you a hard time or anything. This is again just for educational purposes here.
Well, for the sake of the audience, I'll mention that Bryan took a class that Fannie Mae promoted, and when was it, Bryan? A couple of years ago. Yeah. Into our property data collection process, and so he is very familiar with how that process was designed. That's a test program, and in any test program, you learn lessons along the way, and we've learned some interesting things from our own tests. One thing that we've learned is that appraisers are not consistent in how they gather property data. So there's kind of this fundamental issue of whether it's the appraiser or whether it's somebody else. You might argue that Fannie Mae or the institutions have been somewhat careless about defining our own standard, our own expectation around these things. So that's caused a little bit of soul searching for me, certainly, and I think some work for Fannie Mae to go back and look at what do we really require? How do we get consistency? Because I don't necessarily want Bryan to take on 5 people to train him how to inspect properties if Bryan isn't doing it in the way that it should be done. And yet, what is the way it should be done? No one's really ever said that, right? So I think we've got some work there to sort of define what we expect. The other thing that's been really interesting to me is how technology has evolved in the last 12 to 18 months. And I think, somewhat in response to the pandemic and the need for social distancing, we saw a lot of energy in the third-party space go into innovations around property inspection, virtual inspections, and using Zoom like this to inspect your house, right? It doesn't necessarily accomplish everything that we might want, right? Do you want the homeowner trying to tape measure the house while also holding the camera? That seems impossible or awkward. But there are other kinds of technologies that are emerging. And so I think this whole conversation around how do you inspect a property and how do you give information to an appraiser or for an appraiser that is reliable, I think we're seeing potential for new ways of thinking about this that are going to be technology driven. I guess the bottom line is I agree with you. I want the appraiser to have accurate, reliable data. And up to this point, we've traditionally relied on the appraiser's eyes and experience to make sure they get that reliable data. But it turns out that's not necessarily reliable, and we want to do better. And we think we can use technology to help do better.
Very good. Very good. So let's use this last little section, and I'm going to ask some questions because we've had various questions come in. I'm going to tell you the last thing I want to talk about, and Mark kind of summed it up, said there's some pending legislation, and that might help solve the problem. But before I let any of you guys go, the ultimate question that I would like answered, and there's probably not an answer, is how can we encourage or gently nudge the lending community to start embracing the use of trainees without me going with them, once they're trained? And so think on that question, and let's try and put a to-do list together maybe. But let me ask some of these questions. And I think this one's for Lyle. Glenn asked a question. Why do you think the demand will continue? That was in your presentation at the beginning. Lyle. It seems like the demand is driven by the historically low interest rates. Would demand not go down when interest rates increase? That's from Glenn.
Well, I think that we have multiple lines of business at the GSEs, and refinances is obviously a potentially large bucket. But purchase is also a potentially large bucket. And we anticipate that the purchase business is going to continue to grow independent of interest rates. I think we also see that people refinance even in a higher interest rate environment because there are other potential benefits. If they want to take cash out from their equity, or if they want to re-amortize over a longer time period, there are motivations. So while you see refinance activity, we would expect to decline in a higher interest rate environment. It never goes to zero. There's always people out there who are going to refinance.
Yeah.
There's some other predictions. I'm not the economist. Like I can't necessarily make these predictions myself, but I think in general the experts who look at this, we'll expect some decline in business if interest rates go up, but it's going to be. I don't think we're going back to 2011 levels anytime soon. I don't think that's where the economy of the country is at.
Adrian makes a comment, I think more of a comment than a question, but Adrian says, regarding replacement rate analysis, I think there are some math flaws. Many lenders do not allow a trainee signature on the left. The lenders require the signature to show on the ASC database. And that was the thing I brought up to you, Lyle, after your presentation. Additionally, many of the appraisers I know locally never fully retire. They continue to work on a lesser basis, maybe. So I think the trainee number is small and the retirement number is incorrectly large. And that, I think we all acknowledge that Lyle used the tools to his disposal to extract that data. And it's very meaningful, but it's probably not perfect, right? There's probably some inconsistencies there a little bit. So let me, I think most of these, rest of these questions have been answered through our broadcast here. If you have to inspect, there's no benefit. You would have to pay them to do what you can do. We'll get to that in just a minute, Mike. Glenn says, don't be afraid of the trainee. Just have them sign a simple confidentiality and non-solicit agreement, pay them fairly, and you'll be surprised. There's so much opportunity. Do the right thing. Thank you, Glenn, for that. Glenn also asked, what percentage of appraisal waivers are 80% loan to value? What is the cutoff for loans that are low risk? Scott or Lyle, you want to take that one?
Fannie Mae, about 93% are below 80 LTV. The number that are above 80 LTV are all rate term refinances, which means there's no new principal risk.
Okay.
Yeah, I don't have our numbers handy, but we do have the different LTV thresholds for purchase, non-cash out, and cash out.
Okay. So I'm going to go back up to a question. Kathy, where did you go, Kathy? Here's Kathy. And this really kind of goes back to my final question of all of you that I asked you to think about. Kathy is saying, my biggest question is how can we encourage lenders to allow trainees to visit the property without their sponsor? That puts a strain on the sponsor. This is nothing new, just a deterrent for many. So that's my number one question. You know, I think it continues to plague the supervisor of why am I going to bring on a trainee if I still have to do the whole process? And I have some ideas behind that. I mean, nothing prevents me. Like my buddy's got a trainee that's been a trainee for 8 years. I mean, clearly he could be a certified residential appraiser now. He's content where he's at, right? So that trainee has more experience than a lot of certified residential appraisers. He's been doing it 8 years. So what he and I would do many times is I would meet him at the property. And I'd say, Brent, you need help. He was normally measuring when I got there. Brent, you need any help? No, I'm good. I'd go in, I would introduce myself if there was someone there. I'd interview them, but I'd say, hey, Brent's going to come in and ask you a whole bunch more questions. So I'm going to let him do that. I would walk around the interior of the property. I would go outside and walk around the outside of the property. Brent, you need anything else? Nope, I'm good. I would get in my truck and I would leave. Now, have I done an inspection of that property? In my opinion, I have. I might have been there 10, 12, 15 minutes. Brent's going to be there 40 minutes. Okay. So that's how he did provide value to me as a trainee, because I could go off and do another one while he's finishing up that. If I was there by myself, I'd been there 40 minutes instead of 12 minutes. Right. I still had to go. Now, sometimes we had clients where I don't have to go. He goes and does it without me. So back to Kathy's question, how can we encourage these lenders? Fannie Mae's on this call. They accept the use of trainees. Freddie Mac's on this call. They accept the use of trainees. You guys are probably buying the dang mortgage from these lenders. How can we kind of shake them and get them on the same page with the rest of us?
Bryan, let me try to answer the question. At least from our perspective, based on the conversations we've had and the actions we've taken, a couple of things. You wanted a list of things to do. Here they are. Number one is we need to add trainees to the registry. That'll check that box, be very helpful for lenders. We need to get guidance from the appraisal subcommittee on our questions regarding if there are any prohibitions or restrictions within the interagency guidelines, because that will be something that will help lender legal teams maybe feel better about that risk management policy. We need to pass legislation to allow licensees to do FHA assignments. We need to continue to work with AARO and the state regulators to figure out where those barriers are in the states and try to bring some uniformity to the trainee definitions and models, et cetera, so that that's not a barrier. We need to monetize. So we need to get back to the lenders and allow them to do independent inspections and the ability for appraisers, supervisors to monetize that time and make it more worth the while. So there are some definite things today that are happening. It is an ongoing effort to educate the lenders, and it's not a magic wand that the American Bankers Association or the Mortgage Bankers Association can just wave at and say, look, we're going to tell everybody to use trainees. The reality is when you talk to them, it becomes a legal risk issue. If that legal risk issue is a determination by each lender themselves, that's not something that ABA can correct. So
when you say a legal risk, be a little bit more specific to me. I'm not that bright of a guy, Mark. And so my question is, if they're making a loan and going to sell it to Fannie Mae, or is the concern that Fannie Mae is going to make them repurchase that loan because a trainee signed it? Because Lyle's here saying they'll accept it. So what is the risk?
I would love to be able to give you that answer. I don't know. I think that's an individual question for lenders as to what is holding them back. And if you ask 3 lenders, you may get 3 different answers as to what in their business model, what the barrier is. So there's a lot of work that needs to be done to educate and get beyond that risk management question. So it's something that we're committed to with our discussions. I know that the NAA and I know that Fannie and Freddie and AARO, so we're all having those discussions. This needs to continue. Everybody needs to continue having those discussions with the lenders and help them understand it. But I think we are starting to make some progress on the roadblocks that have been pointed out to us. So if we take away those roadblocks, what else then do we have left? And that's how we're trying to chip away at it.
And Bryan, this is Scott. I would just add, to Lyle's slide and a lot of the same work in the QC review that we do at Freddie Mac, I think sharing with the lenders the results of that and really that analysis that overwhelmingly there's going to be some difference, but it is minuscule and you're not really introducing or evidencing that you're introducing any increased risk by utilizing that trainee. And I think hearing Mark's comments, I think there is a difference between risk and perceived risk. And you know, sitting on the bank side for many, many years too. I mean, understand it wasn't that long ago we came out of the crisis where I think a lot of lending institutions really reviewed and tightened up a lot of their policy. And it's a different environment now. And it may be time to really collectively begin to message pretty aggressively pointed at our lender friends to let them know that we're at least not seeing any introduction of increased risk by the use of trainees.
Yeah. You know, I mean, one of the things that we hear, the common thread that we hear from the lending community is, hey, it takes forever to get an appraisal, and you know, we have to wait. And you know, well, let us, as I said, let us use the technology, let us use tools, let us use the workforce that is in the wings waiting, because there are a ton of people ready to jump into this. I had a text yesterday, had a call last night. There are people eager to get into the profession, and there are many of us willing to accept them if we can use them to their highest and best use. And once I get somebody trained up, I want to be able to send them out. If I have to go with them, you've got shackles on me. So let me ask this one last question, and we're winding down. We've got 5 minutes left. And again, I want to thank each of you for devoting 90 minutes to spend with me today. I really, really appreciate it on this hot topic. David asked the question, how about giving a financial incentive and or liability protection to those appraisers who take on trainees? For years, the system has been taking from the appraiser. Why not reverse the trend? I don't know. What's your thoughts on that? I'm with you, David. You got my vote, but I don't know what that looks like or how you do that. Any thoughts on that, guys?
I'll just chime in a bit. Maybe it's a question we should ask the ASC, because at this point, they're collecting fees from all the appraisers and the AMCs, and they've got some funds to consider. Maybe they can subsidize someone that says, I will take on an apprentice or a trainee, and the appraiser that takes them on would get some type of financial reimbursement once the trainee becomes licensed or certified. It's a thought, you know, I've never thought of it, but they're looking for assistance in helping the appraisers across the United States. That might be something to consider.
Yeah, and this is Scott again, Brian, real quick. I think there's two questions there. One is the incentive side, which I think Joe addressed, and the liability protection. Just hearing that, I think that it's a question. It may weaken our argument that we're not introducing risk if we're aggressively going to provide liability protection for appraisers that bring in trainees, implying that there's increased concern with those reports. So that would be something I'd want us to think about.
Yeah, I agree. Hey, Mark, back to you one last time. The legislation that you were talking about to try to get trainees on the national registry, you said that has been introduced or is about to be?
So that bill, excuse me, that bill was introduced in 2019, made its way through the House, didn't get passed through the Senate. So it didn't clear the last legislature. We have to start over. So Congress, now the new Congress is in session. The Senate and the House both have bills ready to go, just working on getting them introduced. So they're not yet introduced for adding trainees to the registry yet, but it will be very soon.
And okay, all right. So if somebody watching right now wanted to get involved and they say, hey, Mark, let me know how, I'll reach out to my representative in my state to say, pass this dang thing, or they want just to get involved to try to make a difference, what would you tell them?
Well, they can certainly always reach out to me, and we're happy to direct them in the right way. I think that there are plenty of organizations out there for appraisers. There's the NAA, there's the ASA, there's the coalitions, there's the Appraisal Institute. So you do have options, and I know that those groups all work very hard in the appraisal profession to be advocates at the state and the federal level. So there is an outlet there. So if you want to be a participant, there's certainly plenty of venues to do so. It's just a matter of a phone call or an email, and we can set you on your way.
Great, great, great. All right. Well, guys, thanks so much for being here. It's been a quick 90 minutes, as I anticipated it would be. Joe, if somebody watching would like to reach out to you and communicate with you, what's the best way to reach you?
Just send me an email. I don't know if our contact information is available on your website or your platform at all.
Well, just tell us what it is, and maybe
Okay.
Ben can put that on the comment.
Sure. It's
as well.
Joe, J-O-E, at Dakota, just like the state, D-A-K-O-T-A, appraisal.net.
Very good. Thank you, Joe. And thank you for being here. Mr. Mark Schiffman, someone wants to reach out to you. What's the best way to do that?
Either by email at mark.schiffman, S-C-H-I-F-F-M-A-N, at REVAA, REVAA.org, or they can phone at 612-716-1812.
Very good. Lyle, somebody wants to communicate with you. Is that allowed?
Yes, Fannie Mae has a web page dedicated to appraisal topics. And at the bottom of that web page, there's a contact us link. And so that's the best way to get in touch with me. If you were to email me directly, the problem is I get too many emails and they get lost in the shuffle, but that will go through a formal process where we log it. So that holds me accountable to respond. And the bonus is you get to look at all the great information on our webpage.
All right, go to his website. Scott Reuter, someone wants to reach out and communicate with you. What's the best way to reach you?
And Lyle missed his calling. He should have been in sales. They can email me directly, Scott_Reuter, R-E-U-T-E-R, at FreddieMac.com. And if you send a nice email, I can give you Lyle's cell phone. I'm teasing.
And then after you guys all leave, I'm going to put your cell phones out in the comments.
Yeah, right.
I would not do that. Well, it's 11:31 Central Time. So we went over by 1 minute. Pretty good, I think. Guys, thanks so much for being here. It was great chatting with all of you and seeing your face. Hopefully we can see each other live at a conference or maybe at the AARO conference. Joe, I hope the AARO conference is going to happen live now in DC, right? In October.
Pretty confident. We have a program committee at 2:00 today, and you'll know right after that. We'll
Great.
get it announced.
Great. Well, I hope it happens because I would love to attend and see everybody in person as opposed to just a face on the screen. And the rest of you guys, I'm sure I'll be seeing you at an upcoming event. So again, thank you very much for being here. Ladies and gentlemen, you've been watching the Appraisal Report webinar brought to you by the fine folks of Appraiser eLearning. This is a special edition webinar. In order to stay in the know, go ahead and subscribe on the YouTube channel right now. And then that way you'll be aware when we have these breaking news special edition webinars. Otherwise, we have our regular scheduled webinar the fourth Thursday of every month at 10 o'clock Central Standard Time in the same location. So we hope to see you very soon in our next webinar. For Joe, Mark, Lyle, Scott, and even Ben, I'm Bryan Reynolds, your host. Thank you for being here. Until next time, happy appraising.
Well,
And Ben's going to work some magic here in just a second.